Hey, what's up, Silver Trader FM subscribers and viewers? Just wanted to do a chart update based on the FOMC non-event. So basically, the Fed came out and said we're going to keep rates at 0 to a quarter percent, and we're going to do that till late 2014. Boring news. Let's look at the silver chart. So last time I made a video, we're right here, and we did break out of it. This descending triangle. 26, 27, all the way to 31st in anticipation of the statement, which was a non-event, so silver headed back down as well as gold. Now let's look at a study. We'll add some Bollinger Bands on here. SMA. So if you look at this, we are within the Bollinger Band. We headed to the top of it, rode it for a couple days, and found nice support right in the middle of it. So according to the Bollinger Band, as long as we're still above in this upper part of it, we're still a bit bullish than bearish, so that's a good sign. But thing is, if we want to get really bullish, where we need to get to is above this 28.50 or 20.40 mark, and that's a major resistance line, at least for now. And we are pretty much going to the top and bottom of it on a weekly, and we're in the middle of that top and bottom range. But I believe a lot of shorts will need to cover at about 28.40. Then we should be able to see a bit of a run, possibly up to 30 to 31, and we'll see if we can break through this upper shadow resistance line, and then we can continue with the bull run if possible. And we'll talk about the commercial traders and large specs, in a few seconds. But on the opposite of that, if we do fail and go below this 26 level, we could see 21 or 22, as I mentioned in my previous video, due to a lot of stop losses being triggered one after another in domino effect mode. So once again, if we go above 28.30, there's nothing more powerful than the bears and the bulls piling on to make a nice and easy trade back up to 31. We shall see in the next few days or weeks. Let's take a look at gold. Gold is looking about the same way, but it's seemed to be leading the way on the bullish side, since it was leading the way before silver got bullish. Gold did break out of this descending triangle where it's finding resistance. Now it's finding support. It's also finding support at a nice even number of 1600. So we'll see. Zoom out a bit. I would get more bullish on gold once we get over this 1695 long-term bull channel. Since we jabbed out of it, we need to get back into it to continue the bull run. So right now I want to talk about the commitment of traders. So the CFTC basically comes out with this report every week. The last one was the 24th, so there should be another one coming out for the 31st. They're a bit late, so I believe they come out every Friday for that week's trading report of commercials. The commercials are here. The long specs and the short speculators. Basically, the commercials are the smart money, the big money, and the large speculators are basically the hedge funds that are playing the market, both short and long. So let's take a look at that. So if we look at silver, for example, we have the commercials here in red, and we have the green are the large speculators, the hedge funds, and the small specs, the not so smart money, down here at the bottom. So as silver fell back in September 2011, for example, the commercials started decreasing their short position and becoming more bullish once again here. These are the first two times it hit the 26 mark. The commercials became more bullish, and as it rose back up, I believe this was the February 29 event when Ron Paul showed the silver bullet to Bernanke. Basically, the commercials shorted the market, net short, and that's where we start seeing it drop. But the past few weeks and months, as silver continued downward to 26, 27 range, the smart money decreasing their short positions, and on the other end, the large specs were increasing their short positions, wisely so. But there could be a big move here, since we're back at the range where it tapped 26, 26, 26 several times. So it's nothing more powerful, once again, when the large specs and the commercials are doing the same thing, and that can definitely move the market one way or the other. At this point, it's most likely going to move in the bullish direction, since we've been tapping this low, and the commercials are looking like they want to go a bit more bullish than bearish, so we shall see. Gold is probably looking the same way. Not as obvious. It's more subtle, as you can see here, and it looks like we're at the upper end of the commercial position, where they're decreasing their net short position and becoming a bit more bullish. While if you look at the small speculators, usually the smart money does the opposite of the small specs, and looks like they're becoming a bit more bearish over time. So I believe the commercials are becoming more bullish if they're doing the opposite. Let's look at the currencies. US dollar index. As you would expect, as the US dollar gains strength, smart money is definitely increasing their short position, while the hedge funds and the speculators are becoming more bullish, as well as the small specs. The smart money's eventually becoming net short on the US dollar index. What do you think is happening with the euro? We're probably becoming more bullish as the euro is dropping and making new lows, right? As you can see here, it crossed over. It reached its high back in September last year. The commercial traders became more bullish on the euro, so there may be a pop coming in the euro. We shall see. Let's take a look at energies, oil, crude oil. As the market, as crude oil headed downward, the commercials lightening up on their short positions, but not too much, so we could still be range bound, 80 to 90 on crude oil. And of course, the bond bubble. What do you think the commercial position's doing on that? So ever since the low of 136 on 30-year bond back in late March, early April, the smart money has been picking up short positions, while the speculators, large and small, have been becoming more bullish. So we're already seeing a down leg right here. So maybe the commercial is onto something. Maybe there really is a bond bubble brewing up with the U.S. Treasury. I just wanted to show one more thing. Copper. The commercial position on copper has gone quite bullish, even though it's been going sideways. So when it went from 390 down to 330, the commercial position just picked up really quickly. So there's something going on with copper. Keep an eye out on it. And that's pretty much it. So these are the COT graphical charts. When I showed you earlier was more of the raw data. These graphical charts can help you draw a bit of a pattern and see which way the commercial smart money traders are headed versus the not so smart money speculators. Silver Trader FM, hope you enjoyed it. Have a great week. Take care, guys.